It is 20 minutes to 10 on Thursday, the 30th of April. My name is Boaz Shoshan, and we are just here with another market broadcast. Now, today we have a slightly special pair of guests. We have both the founder of our business, Dan Denning, who joins us from Australia, and we also have the publisher of our business, Nick O'Connor. Now, plenty of things to discuss today. Gentlemen, thank you very much for joining me. I thought we would start off with something quite interesting that occurred yesterday, where Jerome Powell at the Federal Reserve made a quite interesting statement where he wanted to reassure everybody listening to him that the Federal Reserve won't run out of money. And I quote, we won't run out of money. And I thought that was quite an interesting way of putting it. And it seems quite ominous, really, when a central banker is speaking about the power that he wields in such a way. But Dan, you said recently that what the Federal Reserve hasn't done yet is quite telling, as much as what they have done. Could you expand on that for our listeners, please?
Yeah, there was some. By the way, it's good to talk to you guys again. I thought there was some discussion going into the Fed meeting, mostly from former Fed governors, that what they ought to do is follow the European Central Bank and the Bank of Japan and take the target Fed funds rate negative officially. And when you read the explanations or you hear the explanations of why that policy was recommended, they're absolutely inane, but people keep saying them, that what in a low inflation environment, especially in an economy where 22 million people have lost their jobs in the last 6 weeks, that the Fed needs to do more with interest rates to try and stimulate both lending and job growth, even though there's no evidence that works in any place in the world. All it really does is inflate asset prices. But I think that's actually what the Fed sort of communicated yesterday between the lines, is that they're quite happy right now to keep interest rates low for the purpose of providing liquidity to financial markets and increasingly to real businesses or counties or states or really anybody who wants money right now, apparently. But they don't really have any tools yet to get that liquidity or the growth in money supply into the real economy. And I think there's a way to do that, which they're not willing to embrace yet. The Chinese are starting to do that, so we can talk about that later. But I thought it was interesting, at least, that the Fed, and Powell said this before, no, we're not going to go with negative rates. So to me, that says they're quite happy with this dynamic of stocks making a new high as GDP declines, and that could go on for the second quarter.
That is quite interesting. There seems to be a very conscious decision for the Federal Reserve not to embrace negative rates, though of course that doesn't apply to the rest of the world. I noticed that yesterday Deutsche Bank announced that they would be implementing negative interest rates on deposits greater than 100,000 euros. And it seems that whenever, we've seen this multiple times in the Eurozone, where a bank decides it will start charging negative interest rates on its large deposit holders. But 100,000 is the lowest that I've seen so far that a bank will decide to charge negative interest rates on. Definitely seems like a new normal that is developing in the Eurozone, and makes you wonder, how far and how quickly will this spread to the rest of the world? Nick, what do you make of what's been going on? Because the actions that we're seeing from some of these central bankers does seem to be really quite interesting. Yesterday, Powell said that it was now that we're going to start getting really aggressive in our central bank monetary policy, which really does make you wonder what the next big step is.
Yes, I suppose it does. I mean, I'll just go back to his quote. Because I think it's interesting. So what was it he said? We can't run out of money, or we won't run out of money.
Yeah, we won't run out of money.
Yeah, very good. I suppose the question there is, well, what can you run out of then? Because you're not worried about running out of money or running out of paper or running out of digits on a spreadsheet or a ledger somewhere. But there are other things that can run out that you can't control. And those are the things that people would be worried about. So you can, trust, faith. I don't know if you run out of these things or if they evaporate on you or if they are eroded by your actions. But I just think it smacks of of a financial system or a stewardship and a way of looking at things which just ignores things you can't directly measure until it's far too late, like trust, like faith, which we know are important qualities for the financial system because there's nothing else backing it. We know that. So I'm surprised nobody kind of went down that route and challenged him on that front. It reminds me actually of something Jeremy Corbyn said actually after the bailouts in the UK. He said, I think actually the bailouts were rolled out the day after he stepped down as Labour leader, which is ironic. The irony is that if Labour wins the next election, Keir Starmer will probably have to privatise more than he ever thought he would have to nationalise. Anyway, that's a separate point. But Jeremy Corbyn said, see, I told you we could afford to nationalise these industries or to do whatever it was that had been done, universal basic income, massive help for people. And I thought that was a really interesting way of looking at things. A few of my friends, big Corbyn supporters, said the same thing to me. See, I told you we could afford it. And I just laughed and said, well, you can't decide whether you can afford something the day you take the loan out to do it. It's like somebody buying a round of drinks in a pub on their credit card and saying, see, I told you I could afford it. Like, well, that will only become clear in the fullness of time. Maybe in 20 years, your children or grandchildren will come to you and say, hey, you couldn't afford to do that, could you? And you'll be dead by then, so it won't matter. But it's just this same thing repeated over and over again of the people who are in charge or in positions of authority or in positions where they can influence the debate around these things, just don't seem to care about the consequences or the unmeasurables or the unseen parts of their actions. And it shocks me even though we've been talking about this stuff for the best part of a decade now.
Yes. Interestingly, and this is still going back to that press conference yesterday that Powell did. And it seems to be, we see more and more, ever more blatant sort of changing of the goalposts and more sort of mission creep on behalf of these monetary elites to take more responsibility over what they're doing as it relates to the real economy. Saying that it is important that we all must do X. And sort of unconsciously taking on the responsibility of managing the economy. So yesterday, Powell said, now is not the time for fiscal restraint, right? There is, there will be a time to deal with this, but it is not now for the federal government to expand its balance sheet. Not for the federal government to expand its balance sheet, but for the US Treasury to, issue as much debt as possible to support the US economy. And it was very interesting to hear a central banker say that, because of course that is completely not his job whatsoever. That's the role of the Secretary of the Treasury and the entire Treasury Department. And the Federal Reserve is, of course, supposedly independent from the US government's spending arm. It is, the Federal Reserve is there to maintain financial stability, inflation, et cetera, et cetera, et cetera. But yesterday, Powell took it on himself to say, now is not the time for fiscal restraint. We know, the federal government needs to spend as much as possible, or as much as is necessary to maintain stability in the economy. Now, regardless of whether or not that is true or not, I find it very interesting that Powell, that this is something that Powell is expected to say, and he feels that he should say in public, as though he's one of the policymakers within the federal government who should be, who is giving out these policy responses to the coronavirus. So I find it quite interesting that he said that, because it's a thing that a politician would say, not a central banker. This is now is not time for fiscal restraint. This is exactly what politicians never have time for fiscal restraint, right? There's never going to be a time when there will be a time for fiscal restraint on the side of the federal government. Which I thought was it seems inevitable that we're only going to see more and more bailouts and more sort of centralization of power within the hands of those in the government. It seems quite a bleak outlook, but it's sort of the road to serfdom, as it was originally written by Hayek, the Austrian economist. Dan, do you think are you on the same wavelength as me on that, or do you have a different view on it?
Well, I think actually there's a change coming sooner rather than later, because the policy is a failure. And By the way, I wanted to mention when you said mission creep, initially I thought you said submission creep. And I thought that's also accurate. There's more and more people submitting to policymakers. But what I mean is just to get into the weeds a little bit or into the numbers on the monetary policy, the Fed's increased the broadest measure of monetary policy. So when you see the increase in the Fed's balance sheet, plus savings deposits, money market funds, T-bills, checking deposits, cash notes in circulation. In the U.S. anyway, that M2 is the money supply. And the year-over-year growth in M2 is 16%, around 16% right now, which is higher than it was in 2008. So a lot of people look at that and they say, oh my goodness, that's a red flag for inflation, because that's money that's circulating in the economy, or at least it's money that's defined as the broad money base. But it's not circulating in the economy, because if you look at the velocity of money, that's plunged. So that's businesses investing, that's consumers spending, that's banks lending, that's borrowers borrowing for new stuff. And obviously, velocity of money plunges in a recession. It plunged in 1929, and the Fed didn't create enough liquidity. There was demand for it. The Fed didn't create enough. It plunged again in 2008, and they said, okay, we've fixed that now. We'll make sure there's plenty of liquidity. But the trouble with the monetary policy mechanism right now, which is why Powell is trying to get fiscal policy into the game, is that the money is not getting into the real economy. One, we're in a recession because of the virus, and two, because the government has decided to shut down free enterprise. And we can get into that later. But I think the answer to me, or at least the thing that's going to change this sooner rather than later, is ask yourself the question and then find what the answer is. The question is, what leads to an increase in the velocity of money? Well, it's either inflation, because people want to get rid of it, or it's because the business cycle has turned, businesses invest, and people feel like spending again. It's not going to be that, in my version. It's not going to be the second. I think what happened this month in China was interesting, where the government rolled out its digital RMB. So it's a central bank issued digital currency. It's only available to government employees and people who they call public servants. And if you read the press statements from it, the whole point of that method of controlling the money supply is it's kind of, one, it's financial surveillance, so the government has complete transparency over what you're doing with your money. But there was a quote, this was in The Guardian, a quote from a professor at Peking University. He said, although there's little change from the perspective of user use, from the perspective of central bank supervision, future forms of finance, payment, business, and social governance, this is the biggest thing ever. So not just a big thing, the biggest thing ever, because it now allows you to increase or decrease the velocity of money, because you're directly controlling what's happening at the consumer level. So that's not what is happening in Europe and the United States. And that's why monetary policy continues to favor financial assets in the US, and really just the status quo in Europe. But I think something like that, whether you want to call it UBI or MMT, is a political step. It's a legislative step. It's something the Treasury will do. So I think the Fed has reached the limits of what it can do with monetary policy. So it sets the stage for a huge increase in inflation with these other political measures.
Yeah, the digital currency idea seems like this is a politician's dream. You'd be able to with the stroke of a key of a mouse, with the click of a mouse or a keystroke, you'd be able to requisition funds and place it with whichever demographic you were trying to target to get reelected and the like. And there's been a fair amount of discussion of that over the last several years, especially when we saw the cryptocurrency boom. It was interesting to see that in one of the bills, the fiscal stimulus bills were unveiled in the States. You had that there was that inclusion of a digital dollar. Now, as I recall, that bill did not pass, but it was clear that there was this. There is a desire at some of the highest levels of government to create this flexible digital currency. Nick, what's your thoughts on that? Do you think we're going to see something like that here in the UK sometime? It seems to me it seems a step maybe too far beyond my imagination to imagine the current administration wanting to try something like that. But you never say never.
Well, no, never say never. I mean, Boris Johnson is quite a daring politician. Actually, he does roll the dice. That's. I don't know whether or not he would roll it in that way, but I, wouldn't put it past him. He is quite willing to take risks. I mean, it's interesting to note what happened to Bitcoin yesterday and overnight. Kind of broke out to new highs. I think it's approaching the $10,000 mark, or it was at one point this morning. I had lots of messages from people when I woke up. Maybe that's connected to what was the comments from the Fed yesterday. I don't know the extent to which you can directly connect those things, but it certainly looks like something interesting is happening with Bitcoin. When it comes to digital currencies, I would say, well, let's think about it like this. If what you want is people to start spending money more freely in order for the velocity of money to increase, you kind of want people to see the money that they have as not worthless, but less valuable. So I'll give you an example. When you go on holiday and you take out a lot of cash, or maybe you don't do that anymore, but you take out a lot of foreign currency, and it becomes really, really easy to spend that money because you don't really know its value. You're on holiday. Sometimes you kind of get into a monopoly money type situation where your direct relationship with the value of that money is broken, or you don't bother to really engage with it. So you just spend. Actually, if I was trying to create a digital currency with the sole goal of increasing the velocity of money, I don't know why we have to increase the velocity of money. It's just a number. It doesn't really impact anybody's life particularly, I don't think, especially if you're creating policies to make that number go up. It ceases to become a useful target or a useful number. But put that to one side. You would want to create a currency that people didn't value all that directly, so that they'd go out and blow it, so they'd spend it. So I think that's how I would go about it. I saw an interesting chart, actually, to link back to the Bitcoin stuff. The number of people opening Bitcoin accounts and depositing exactly the amount of money that was given to them by the US government, which I think was $1,500 each.
1,200, yeah. I saw that too.
There was just an incredible spike of account openings and deposits of exactly $1,200 into Bitcoin. It was quite shocking. I'll pull that chart from somewhere and share it with people soon. But that was an eye-opener, because that's just people taking that money and going immediately and putting it into the cryptocurrency market. That I've kind of made a separate point there in the second part of my answer, but I don't know. The digital currency thing seems, you'd have to figure out what their end game was. Is it to try and bail out the banks via a back door? So is it to bundle more cash to financial institutions, or is it to try and break people's relationship with money itself and therefore change people's behavior? Maybe it could be both, but I don't see.
I think it's the two things that I mentioned, because I think you're right. You've highlighted the problem. The first is it's a form of mass financial surveillance, but at the wallet level. So instead of looking at GDP and macro stuff, you can just see what's O'Connor doing, what's Boaz doing, because it's all completely transparent. So that ticks one box. But in terms of value, if you change what money is so that it's digital and the government controls it, then it doesn't matter what people think it's worth. It's not a subjective decision. It's not even an exchange decision. What can I get for it? Because the control of what it can buy has now shifted completely to the people that are managing the money. And I mean, the corollary to that is Bitcoin, which is getting ready to have, and it can't be controlled like that. So I think that's why people are at an intuitive level saying, hang on, that's completely different. But I think instead of the Fed or central banks trying to influence behavior by changing people's perception of what money is worth or what the inflation rate is worth, what it's migrating towards, and most quickly in China of all places, is, well, let's just leave that out of it. We'll tell you what it's worth. And if it's worth less, we'll just make it worth less to encourage you to spend it. We'll delete money from your savings account, or we'll impose a negative interest rate. So it makes value a question of control.
That's a very interesting way of putting it. And Nick, I find that observation with holiday money to be really quite insightful. I mean, especially if they did create a digital currency and they did distinguish it from regular pound sterling, so they called it, so maybe gave it a different symbol or gave it a different name. And this was simply a digital form of money that everyone had been credited with for a while. I can very easily see folks just treating it almost as holiday money. That it's just monopoly money that I don't really mind what I do spend it on. But of course, we come back to the problems of control and the monetary sort of surveillance that entails. Changing gears slightly, Dan. Earlier, before we started this call, you've done your tour of bolt holes throughout the U.S. Places to weather the storm throughout any sort of economic calamity, and in order to be have plenty of freedom and in order to be quite safe. You're currently based out in Australia. Very nice place to be, I can imagine, at the moment. But before we start this call, you said you were wondering whether or not you were actually going to stay there and whether you'd be moving elsewhere in the future. Could you expand on that a bit?
Yeah. So as a dual citizen, both Australian and U.S., I became an Australian citizen in 2015. I'm slightly I'm included in the Australian government's ban on foreign travel, but I can apply for an exemption because I'm also an American, and there are certain criteria that you have to meet to satisfy their standards that it's okay for you to leave the country right now. So I don't know how difficult that's going to be, but I decided that I would go ahead and apply to do that now because I'd rather know straight away if I have to stay here until the ban on international travel is lifted, which could be 2 months from now, it could be 6 months from now, it could be next year. I'd rather know sooner rather than later. And I don't particularly fancy spending a winter in Melbourne. But I also, for me, it's kind of philosophical at some level that Australia's done, I think they would be regarded by a lot of people as having done a pretty good job of managing this public health crisis, not least because it's a country surrounded by water and they closed the border at a pretty early stage. But, there's been a pretty, at least in the public, a pretty welcoming reaction to these restrictions on physical liberties and freedoms, which at one level is understandable. I think most of us want to not get our parents and grandparents sick. We don't want to walk out the door and kill someone, as we've been told we were going to do. But on another level, these people pretty quickly embrace these controls as the new normal and say that, well, now I have to seek permission to do things which before were just part of my natural right as a human being. And I'm not comfortable with that, so that as an investor, I would compare it this way and say, my preference for safety has declined and my preference for liquidity has increased. And as chaotic or as uncertain as the situation is in the U.S. is, one, it's where most of my readers are, it's where most of my family is, where most of my financial assets are, but also I prefer a little more dynamic, open system than what's here. But it's a weird position for me to be in, to not be able to go where I want to go. And it's not because it's not bad that it's bad here. It's great. I'm comfortable. And I say that, that's a partly function of the work in the business that we're in. For a lot of people, this isn't a comfortable thing. It's not a relaxing thing. It's not a meditative thing. They've had their income stripped away. They've been told they can't go to work. They've been told that their jobs are not essential. They can't pay their mortgage. They can't pay their credit card. They can't feed their kids. And I think that the longer that goes on, there's going to be a huge political backlash, not just here, but especially in the U.S. And for me, part of the question is, well, where do you want to be when those things start to percolate to the top of the mix? And it's not on the 23rd floor of an apartment building in Melbourne for me.
Yeah, it seems like the longer people are kept in lockdown and the more unemployment is generated, it seems like this is going to just have a stronger and stronger political response. Nick, what do you make of that? I mean, do you think interestingly, how long do you think this lockdown might last, and what's your view on it?
It's a tricky one, isn't it? Because there's the official lockdown, which I feel will start to be lifted in this country within the next month or so. But then the behavioural aspect is perhaps more interesting, because what will people be comfortable doing once they're allowed outside? I mean, that is a personal preference, which, to echo Dan's point, is probably better. That, you know, if you have the choice to go out or not go out, and you choose to stay inside, then fine, that's your decision. The extent to which life will just get back to usual, I don't know. There seems to be, every time there's talk of shops reopening or businesses reopening, the stock market seems to rise. And I always think, what are people going to be buying when this is all over? I don't think people's behavior will just go back to usual. Their consuming behavior will change. What they want to buy, what they don't want to buy, where they want to be, where they don't want to be. These things will change. That's the unknown of all of this. We can't figure that out until we start to see economies open up and we start to see how people behave after this. So it's interesting on that level. I do think there's a philosophical underpinning to some of this, which is, I mean, I'm not saying that this is true of everybody, because some people perhaps don't earn enough money to save, or they live hand to mouth, and I know that's the case for lots of people. So I don't want to appear judgmental, but there seems to be we're living through the consequences of having people incentivized not to save money and not to prepare for a rainy day for the last decade or so. You know, and that's a behavioral thing too. If you incentivize spending over saving, and you do that via the interest rate, then when things, when the shit hits the fan, excuse my French, then people won't have as much savings as perhaps they would have had, and they will be less resilient and less able to withstand a downturn like this. Again, I don't mean that across everybody, and I don't mean it in a judgmental way, but it's certainly true that the last decade has shaped people's spending and saving habits, and I think we are living through some of that now. So yeah, when if you can't feed your kids a week into a lockdown, or into a situation where your income has been stripped away, as Dan said, I have sympathy for you, but I also think, well, did it have to be that way? Did we have to create a situation where people were in that position? Some people will always be, but some people didn't need to be. I don't know how you solve that problem, and probably it's a politically unpalatable view to suggest that people should, save for a rainy day and think about bad things potentially happening and prepare for them. But it strikes me that those are relatively useful, mental states to occupy. And why would you want to have a situation where people didn't think about those things? I don't know. It probably becomes too abstract and too philosophical at that point. So I'll throw back to you, Boaz.
Well, it's that trickle-down economics, right? So just like Jerome Powell saying, this is not the time for fiscal, restraint. This is not the time for fiscal prudence. I think that comes from the top of the financial system, and it trickles all the way down. And of course, all across the developed world, you've seen that via the interest rate, as you say, that attempt to force spending and at the expense of saving. And it doesn't seem like that's going to end anytime soon. But interesting what you were saying with the changing of behavior. And I think I'd like to sort of close this podcast and asking both of you your views on this. So I have been, so far this week, I've been asking a few of our guests what they think the change in behavior is actually going to be once this is over. So, for example, are all of the people that are using apps like Zoom and watching lots of Netflix, is that trend going to continue once the lockdown is actually opened? So we've seen the stock prices for these companies that are providing this service during this time do very well. All of the sort of the lockdown, working from home goods and services that everybody is using, like Amazon as well. These are all doing very well as a result of lockdown. When the lockdown is over, do you think that the behavior that has been cemented during this period is going to remain, or do you think people are going to, once this is over, do you think they're going to want to take holidays, go to the pub as much as possible, fly, wherever on, because airline tickets are now really, really cheap? Or do you think they're going to sort of rebel against the lockdown in that way? Or do you think they're going to stick with these new habits that have been instilled in us? And the more I think about it, the more I think it changes depending on how old you are. It's sort of your appetite for risk with the virus. So, financial advisors, there's generally an attitude to risk questionnaire. This often has a lot to do with how old you are as to how much risk you should be taking. And I think it's maybe a little similar with the virus, where the younger you are, and if you don't have respiratory illnesses, you may be perceived as having a higher attitude to risk and be a lot more gung-ho about going out and being at risk of getting the virus. But I'd like to hear what both of you think of this. Do you think the behavior that we're being the behaviors we're developing now while in lockdown are going to continue after this is over, or are we going to rebel against them? Dan, I'll start with you.
I think in general, people will return to normal because human beings are social animals. And when you're alone by yourself, or you're mediating your experience of the world through technology, we've already seen what that leads to. People were self-isolating through technology before the virus. It made them unhappy, alcoholic, and addicted to drugs. Some of those people will continue to do that, but I think other people, they want to go out, they want to eat, they want to be with their friends, they want to go to sporting events, they want to, they want to meet, they want to date and continue to have sex. That's not going to change. I think demographically, you might be right that people who are going to be financially risk averse might become more risk averse because the stakes are higher for them. And that's quite appropriate. The stakes are clearly quite high for people who have pre-existing conditions. But I think a third thing that might happen is that, given enough time and distance, assuming we're not whipped up into another state of panic and fear, I think people might examine whether or not they're overly prone to excitability, how to evaluate information better. And maybe, like Nick said, there'll be some reflection on, have I optimized my life too much? Am I focused too much on maximizing current pleasure? In economic terms, where's the willingness to delay consumption and delay gratification because you might need that money later? And this is a real shot across the bow for people under 40, that maybe you shouldn't be living your financial life like it was a just-in-time inventory thing. You need a little buffer in your cash flow. So that will affect their consumption as well. But, it's a very individual thing. And I just hope that people don't become massively afraid to engage with the world, because then it becomes a prison planet. And Alex Jones was right the whole time.
Nick, what do you make of it?
Yeah, I would say, it is an individual thing. So I'll start with what I think my own response will be. If the lockdown ends, I would be more likely to socialize, obviously. So I would probably pop to the pub if it was quite quiet. I would see my friends. I think I will keep things in mind in terms of social distancing and try to avoid certain situations. One thing that I won't be in a rush to do is to jump on a train and the tube and head into the office in central London, because if this has taught me anything, it's that we can do a lot of stuff from home. I don't live in London. I live about 80 miles north of London, so it's quite a long commute for me. So I won't be in a hurry to do that because I don't like it anyway. And to me, that just seems like risk on top of already being uncomfortable commuting anyway. So some things will go back to normal and other things won't. And I think that will probably be the case across the economy. Like I said earlier, you can't know exactly how that will manifest itself. I don't think things will go back to exactly the way they were. I think this has been too big, but they won't change as radically. We'll still be people, as Dan said, so there'll be certain things we still want to do. My predictions long term, by the way, is I think furloughing, I don't know if that's a thing that's just in the UK or is around the world. I think that's here to stay. So every recession, every minor little dip in the economy, I think staff will be furloughed, the government will be forced to step in, because the expectation now will be that, hey, when there's a downturn, well, the last downturn, you paid 80% of my wages and I didn't have to work and blah, 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 blah. Again, how does a government really refuse to do those things the next time around, the next garden variety recession? I don't think they can. I just think once you've done it, it's out there in the open. And increasingly we'll see these extreme measures used to fight every recession, every downturn, which of course will lead to disaster in the long term because we can't afford it. But I think furloughing is here to stay. Just in the same way that people said that interest rates at zero or near zero were a temporary measure back in 2009, 2010, and they would normalize sooner or later. No, never happened. Here to stay. Same thing again this time around, but at a much bigger scale. When it comes to employment and when it comes to the way businesses operate during downturns. That's my prediction.
Well, as Jerome said, they've no shortage of money. So, of course, I can definitely imagine governments wanting to get on board with that, whatever the long-term cost may be. But thank you both very much for joining me for today's market broadcast. It has been quite a long one today. Just before we sign off, from the pair of you, have you any closing remarks you'd like to share with our listeners? Dan, you first.
Nope.
Very good. Nick, anything?
In true Denning style, my answer is no too. No, we've said everything. Make sure that if you're watching this on Thursday, you check out James Allen's keynote in the Beyond Oil Summit, because it's been very popular, so it's well worth a look. Couldn't avoid saying that at some point in today's show. But no, I think we've covered a lot of ground.
Very good. Thank you both very much for joining me. This has been a very interesting discussion, and hopefully we'll be able to do another one of these sometime soon. And that sums up today's market broadcast. So it's currently 16 minutes past 10. It's looking quite overcast and cloudy here in London, but we're getting to the end of a very wild week, and it'll be interesting to see how it all ends tomorrow. Now, tomorrow, actually, I have Akhil Patel over at Cycles, Trends and Forecasts on. Now, earlier in this week, Nikolai Hubble said that something called the law of economic rent, as David Ricardo's grand theory, was coming to an end. And this is something that's also to do with land prices and how that functions within the real economy. Now, Nikolai thought that this was, we've come to the end of this due to the advent of mobile communications and everyone using the internet. So being in the middle of a city is less relevant. Now, Akhil has a completely opposite view. And I'll be asking him about that tomorrow, and how all of this lockdown and how all this lockdown is affecting land prices. That is all for today. Hope this finds you in good health and in good spirits, and we shall be back with you tomorrow.